Happy Monday, everybody. I hope you had a great weekend. Today is January 30, 2023, and this is your Monday Market Update. There's a lot that's been going on in the past week and a bunch this coming week, so let's jump into the recap from last week, talk about what to expect in the week to come. Layoffs have been the big news, and as I mentioned last week, these are not just numbers, they're real people. In digging into these numbers, there are a few things to note. First of all, the right sizing in so many of these companies comes on the tail end of a huge hiring in the pandemic years. As growth in so much of the tech space was off the charts, Google, 12,000 jobs, Microsoft, 10,000, Amazon, 18,000. Those are the cuts. Please note that these companies combined hire a lot during the pandemic. Regulatory filings show that Google's workforce grew by nearly 70,000 people. These are still people, but recent studies have shown that 80% of those that have been laid off in the tech workers found new jobs within 3 months, and half of those got jobs with higher pay. So before we talk about all the overqualified baristas, 3/4 of those laid off got jobs in the same industry. So it's an interesting little piece about that unemployment, all those unemployment numbers. This is just to continue to focus on the noise in the marketplace and attempt again to focus you on the signal, not the noise. We're getting so much news, it's hard to keep up. So regardless of these Monday market updates, please stay focused on the long term. Let's get back into it for this week. Monday stocks in the U.S. gapped higher, following through from Friday's moves. Earnings reports were on the menu and in the crosshairs. More on that soon. Feeling that the Eurozone may avoid recession and that the Fed possibly being less hawkish kept risk on money in the markets. Volume was light. We got pushed around by that layoff news that we just spoke about, but markets ended pretty strong. S&P up almost 1.25%, Dow up about 0.75%, and the Nasdaq up just over 2%. In case you've not been watching, the dollar index is on a fast track back to 100, and the real kicker, Bitcoin, is back up near 23,000. Stocks opened a bit heavy to the downside on Tuesday, and the big news was the technical problems at the New York Stock Exchange, getting some of the biggest names open for trading. Few high-profile halts at the open had us thinking about the flash crash from 2010. All got straightened out quickly, so it was soon forgotten. Eco data from Europe was back in expansion territory, but that was overshadowed by 3M earnings and guidance for a tough upcoming year. Stocks churned sideways most of the day. The 2-year auction was strong and the yields fell. Stocks hit new session highs, but no follow-through. Markets quietly ended the day slightly lower. The Dow eked out a slight gain of about 0.25%, Dow down a hair, and the Nasdaq down about 0.25%. Stocks gapped lower for the second day in a row on Wednesday, and though there was not New York Stock Exchange tech issues to deal with, the markets were chewing on earnings. Microsoft earnings were decent for the previous quarter, but as we know, the guidance is what mattered, and that was not sunny to say the least. The warnings about customers cutting back on spending and generally more difficult business environment were pretty somber. So this plays into what I've been telling you about my concerns about the markets in general. In my opinion, we need to keep a close eye on guidance. Earnings will make the difference between a good year and a bad year. Valuations are the key. And if we cannot hold on to S&P $225 for earnings for 2023, we'll be over our skis in the valuation on valuation, and it will cap what this market can do this year. That is what was weighing on the markets. Good central bank news, or at least in my opinion, very interesting news. The Bank of Canada, one of the first central banks to proclaim a hardcore war on inflation last year, raised rates by 25 basis points as expected, and they signaled that they were pausing any further hikes to observe the impacts of the previous hikes. That is huge. And if we do, in fact, see this from the Fed and other central banks, this will be notable. That was not enough to offset the earnings news, but the market ended pretty quiet. The Dow was up a hair, S&P down a hair, and the Nasdaq down less than 0.25%. Soft landing was once again on the lips as markets gapped higher on Thursday. IBM was a slight disappointment, but that was offset by the spotlight grabber Elon Musk and the Tesla earnings. After a pretty horrendous 2022 for that stock, between Twitter's story and the slowdown story, Tesla has been rebounding of late, and their earnings release. Their earnings were good, but the guidance was Musk-like, saying that they could deliver even more cars in 2023 than previously guided. The rest of the stock-specific news was overshadowed, and eco data was solid, and though good news has been bad news, this time it was not. Interpretation of the news was more to the idea that in the face of the Fed actions in place, aggressive hawkishness, that the economy has been resilient. Pay no attention to the fact that this kind of information has caused selling many times, as we've discussed before. Short term, these ideas are subject to the way the wind's blowing. On this day, it was bullish. Dow was up 0.5%, S&P up a bit over 1%, the Nasdaq was up nearly 2%. Stocks ended the week strong for the bulls. Markets did open lower on Friday as earnings continued to pile in. PCE, the inflation measure the Fed watches so closely, came in line with expectations, so no surprise there. The earnings were mostly good, and the overall wind on the street continued to blow in the bullish direction. Recall that we were watching for credit card companies like Visa to get a read on consumer, and their read is still positive. Amex and MasterCard also. By the end of the day, Friday, about 30% of S&P 500 companies have reported earnings, and it looks like they're on track for a 5% decline year over year. 69% of them had positive earnings surprises, and 60% positive revenue surprises. The market finished pretty strong for the week. Dow was up slightly, S&P up about 0.25%, NASDAQ, the star of the ball, was up almost 1%. All three of them were positive for the week and on pace for a positive month, best since July. Nearly 2/3 of Friday's 52-week highs in the S&P stocks were also all-time highs. Impressive, no? Just to prove to you that we need to be careful how we look at some of these statistics. That's 2/3 of the 13 stocks that hit all-time highs. Not so impressive. Remember, signal through the noise. Keep our eyes on the long term. A few trading days left in the month and see how that goes. This coming week is going to be a pretty eventful one, and not just as the Fed decision comes down on Wednesday. Arguably, this is one of the most important weeks in a while. We'll get Fed decision, employment data, and inflation updates, and this week is the biggest week so far this year on the earnings front, so we'll see how that goes also. The long list of important earnings reports and eco data, that's jobs weeks too. It's jobs week also, JOLTS, private sector payroll, non-farm payroll, and all with the probability to move the markets. As I just mentioned, Tuesday and Wednesday is the Fed meeting with the announcement on Wednesday and the press conference. We have not heard from the Fed heads in a week, so to hear from the top, we'll see how he likes the recent move in the markets. Last presser, he did indicate that he was not liking the markets being so strong. Not to be totally outdone, we'll hear from the ECB and the BOE on their rate decisions also. Overall, big earnings, big job news, and big central bank news. Like I said, it will be eventful. Overall, the market is pricing in a lot of good news, and that is great if we get the good news. I'll mention to you that I am concerned about the valuations that we're showing in the market, still pretty rich. That is sustainable if the economy is holding on and recovering, not so much if we still have some downturn ahead. We'll have to keep a watch on this. We'll continue to focus on the long-term goals, time horizon, and risk tolerance. Let's keep having those conversations. Watch for upcoming Friday planning videos as we move into the month 2 of this year and more ideas for your financial plans. Stay in touch. Have a great week.